Bitcoin has long been awaiting the acceptance and legitimacy from people and governments. And when traditional financial powerhouses decided to enter the crypto space with the potential approval of a Bitcoin ETF, this move could redefine the industry and legitimize this cryptocurrency. But have you ever wondered what impact will this have on the world of cryptocurrencies and the assets that you're holding? In this video, I will go over why the financial powerhouses are getting into the crypto space and what impact that it may have on the currency, which could impact you and me. One of the world's colossal asset manager with over $9 trillion under management, Blackrock, filed to create a Bitcoin-based exchange-traded fund or ETF, sparking hopes of regulatory approval. Because historically, Blackrock has a successful track record with its ETF applications, having been rejected only once out of over 550 filings. Blackrock's application has boosted confidence in the sector, causing a rally in Bitcoin prices. Other firms, including 21 Shares in partnership with Cathie ARK Investment Management, Invesco, WisdomTree, Fidelity Investments, has also filing for a spot Bitcoin ETF, following Blackrock. Fidelity Investments, Charles Schwab, and Citadel are launching EDX, a brand new cryptocurrency exchange. Even Deutsche Bank, with a massive $1.4 trillion in balance sheet, applied for a license to custody crypto. These announcements signals a clear message. Traditional financial firms finally believe that digital assets are here to stay. But that may not be a good thing for cryptocurrency and its holders like you and me. Although no cryptocurrency ETF have been approved in the US due to regulatory concerns. Now, you might be wondering, why does this matter or what difference could it make? I mean, after all, big banks getting into the crypto space is a good thing, right? Well, yeah, these developments could make Bitcoin and other digital assets far more accessible to the general public. With BlackRock's Bitcoin ETF potentially listing on the Nasdaq, more investors could easily invest in Bitcoin. This isn't just a speculation. Bitcoin's value surged by 20%, surpassing the 30,000 mark for the first time since April following these announcements. These significant developments have led to a declaration that the great accumulation of Bitcoin has begun. In fact, Cameron Winklevoss, you know, the guy who came up with the idea of Facebook before Mark Zuckerberg, and the co-founder of Gemini cryptocurrency exchange, declared the window to purchase pre-IPO Bitcoin before ETFs go live is closing fast. And this might seem like a bold statement. They come at a time when Bitcoin supply is largely limited and mostly stagnant. According to a data from Glassnode, about 68% of Bitcoin in circulation hasn't moved at all in the past year. So if demand exceeds supply, could this mean more price gain for Bitcoin? Hi, my name is Tasvir Mirza. I'm a realtor and a diversified investor based in South Florida. And on this channel, I make finance videos decentralized. Feel free to jump around the timestamp below if you'd like to save some time. And while you're down there, consider hitting the like and subscribe button below. It's been a brutal stretch for crypto world. We saw nearly $2 trillion of market value in cryptocurrencies evaporated since the market peaked in the late 2021. Companies collapsed, and accusations of fraud and market manipulation became commonplace. The remaining businesses are now under watchful eyes of US regulators. So what's the issue here of not approving the ETF application? According to SEC, NASDAQ CBOE's filings didn't sufficiently outline the surveillance, sharing agreements, crucial provision to alleviate the SEC's concerns over potential market manipulation. The agency also mentioned that the filings failed to name the Bitcoin spot exchanges that asset managers plan to partner with. However, it seems this may be just a temporary setback. Bloomberg ETF analyst Eric Belshon has in fact seized the report arguably good news, and here's why. The SEC has suggested that the exchanges can update their application and refile, which the companies already has, indicating an opportunity for growth and refinement rather than complete shutdown. If these big boys are pouring in, where do we fit in? Well, these big boys might play a crucial role. After all, one of the benefits of digital asset market is its accessibility to everyone, not just institutional investors. The increasing involvement of large financial institutions such as Fidelity Investments and JP Morgan could bring stability to the crypto market and encourage more retail investors to participate. This brings us to another question. If large traditional financial institutions become active participants, could the crypto market cap grow from $1 trillion to $10 trillion in the next 5 years? After all, just 5 years ago, the entire market cap of liquid crypto was around $250 billion and hit a high of around $2.6 trillion in late 2021. But even with this large market cap growth and these institutional involvements, may not be a good thing for individual investors or holders like you and I will go over that why. With Bitcoin ETFs becoming the talk of the town, the rules of the game are changing. In a nutshell, ETFs are funds that invest in Bitcoin on behalf of its shareholders. And while this sounds promising, there's a catch. Take Grayscale Investment, for example, which operates the Grayscale Bitcoin Trust. Despite not being an ETF, it holds Bitcoin like one, but its share trades at 28% discount to the value of the Bitcoin it owns. Their solution? Convert the trust to an ETF. If they win this battle, it could open floodgates for more Bitcoin ETFs. So here's a $1 million question. Could the approval of these ETFs launch a bull market, skyrocketing the value of Bitcoin? Or could Wallstreet's dominance over Bitcoin through ETFs lead to a dangerous concentration of power? And if you want this video to get the approval from YouTube's algorithm, consider hitting the like and subscribe button below. Regulators have raised multiple concerns regarding Bitcoin, including worries about liquidity, manipulation, and its extreme volatility, which could pose risks of ordinary investors. Over the past 3 years, Bitcoin's full-year return exhibited significant fluctuations, with gains of 305% in 2020 and an additional 60% in 2021, followed by a sharp loss of 64% in 2022. The SEC has questioned whether investment funds possess sufficient information to accurately value tokens like Bitcoin and verify ownership of the underlying coins. SEC Chairman Gary Gensler testified to the Senate Banking Committee in 2021, highlighting the lack of regulatory oversight and surveillance in the cryptocurrency market, which raised concern about potential fraud and manipulation. To address some of these concerns, entities like Blackrock and others have proposed surveillance sharing agreements aiming to mitigate the risk of the market manipulation and fraud. As part of this effort, Coinbase, the sole publicly traded pure-play spot crypto exchange in the US, has emerged as the preferred market surveillance partner for ETF issuers. If BlackRock Spot Bitcoin ETF and others like it get approved, there is a chance that it might lead to a surge of investments and new bull market, driving the price of the Bitcoin higher. However, there are also concerns about Wallstreet firms gaining too much control over the Bitcoin market if they start controlling large number of tokens through ETFs. And you and I, we both know what happens when Wallstreet gets in. And why do I say this? This is Larry Fink, CEO of BlackRock.
But most importantly, what I think about most of these cryptocurrencies, it just identifies how much money laundering there is being done in the world. How much people are trying to move currencies from one place to another.
And this was him in 2023.
All of crypto, it's digitizing gold in many ways. Instead of investing in gold as a hedge against inflation, a hedge against the onerous problems of any one country, or the devaluation of your currency, whatever country you're in, let's be clear, Bitcoin is an international asset.
Wow, that's where Bitcoin or cryptocurrency in general could change forever. The fundamental of Bitcoin is its decentralization, meaning no government or any institution has control over the currency. It's owned and controlled by people like you and I. However, if a significant portion of Bitcoin ends up in financial products, it might harm the network's original purpose. Decentralized currency. It's essential to have a healthy number of people owning and using Bitcoin directly to maintain its true value. There's also the risk of financial firms could influence changing to the underlying Bitcoin blockchain, including creating a new cryptocurrency through a fork, which could lead to confusion and potential market instability. Steven Lupka from Swan Bitcoin warns against this kind of centralization, as it might deviate from Bitcoin's original purpose and lead to market manipulation. He believes that Bitcoin should remain decentralized and widely owned by individual users. However, Jay Jog from Say Labs argue that large financial firms would have too much at stake to act maliciously, and that their economic interests would prevent them from making drastic changes to Bitcoin fundamentals. Despite the risk, both Lupka and Jog believe that the entry of traditional financial firms into Bitcoin market will ultimately benefit the cryptocurrency. The involvement of institutional investors has historically resulted in significant inflows, as seen with the ProShares Bitcoin Future ETF launched in 2021. If you want to know more about ETFs, I covered this in this video here. There you have it. Let me know your thoughts on big banks entering the crypto space in the comment section below. Consider hitting the like and subscribe button below so we can meet again. As always, if you like the vibe, join the tribe. Thank you for hanging out with me. See you in the next video. In fact, Cameron Winklevoss. In fact, Cameron Winklevoss.